Good Thursday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Mitri Pargamanik. How you doing, D?
Good morning, Will. How are you?
Good. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker dealer. That's what they're there for, to give you advice, provide you with guidance. I'm going to share my screen here. While I'm sharing my screen, if anybody is joining us for the first time, Will and I do this show in the mornings to help answer any questions you may have about Market Chameleon tools, data, or analytics. You could come and ask your question live on the show. We have a link to Zoom out there on the live chat on YouTube. If you click on that link, it takes you over to Zoom. At the bottom of the screen, there's a button, raise your hand. Click on that. You don't have to turn on your video camera once we let you in. Everybody could hear you, but you could ask your question direct, navigate us to what you're looking at. If you prefer typing in your question, you can type it in on the live chat on YouTube. Will's watching, looking for questions to appear there. When they come in, he'll read it back to me. So those are two ways to ask questions. While we're waiting for people to put in their questions or more people to come in, we'll take a look at the pre-market report, try to get some insights what's going on in the pre-market hours. If we don't have any questions, I'll default to some questions I get either over the email or chat, or I think there was one question outstanding yesterday at the end of the show. Well, if you remember, let me know, I'll try to answer that.
All right, perfect.
Morning. Okay. So let's start out with the pre-market report. These are stocks trading in the pre-market hours. We have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. Down here, I see 51 stocks made our percentage gainers list, 54 on the decliners. So from this perspective, looks kind of like a neutral opening, kind of even there. So if you look at this list, you'll see a lot of small cap stocks in there, ETFs, leverage products. It could be a preferred stock, a closed-end fund. It could be even, a warrant. So anything that's listed on the major U.S. exchanges, if it's trading in pre-market hours, it meets our thresholds, it could make this list. And we want to narrow it down to a smaller group of stocks, maybe more focused, to get some more focused insights. And to do that, we could use the filters here above. And I'm going to use this one, an ETF. If you drop it down, you get a list of ETFs to choose from. There are some sector ETFs in there and broad-based market ETFs like these on top. And we'll choose this one, the SPY, that's the S&P 500 ETF. And when you click on that, the list below will get filtered by stocks that are holdings in the SPY ETF. And here you see 4 stocks made our percentage gainers list, 9 on the decliners. So from this perspective,
these banks are still getting hit, huh?
Like a little bit, yeah, bearish bias. And I think the banks continue to be, in the news and in the spotlight. And we talked about the banks for already a couple days now. And I think that with the banking sector, there's a tail risk nobody thinks about. And the issue with banks is that everything could look really good for a really long time, but they're in the business of risk, right? That's their business is risk, taking on risk, earning yield on earning premium on risk, and managing this risk. And they have risk on their books that really are very hard to calculate and shock, because there are so many different interrelationships going on in the financial industry that even if everything looks fine and looks correct, things could deteriorate so quickly that we've seen these banks basically go out of business in a matter of days. Banks with, thousands and 10,000s of employees with a bunch of depositors, and everything looks good. And then all of a sudden, we've seen that with Bear Stearns, with Lehman Brothers, now with SVB Bank. And I think that tail risk people are starting to price in or starting to worry about. And, Credit Suisse is another one. I think that they just had to access like $50 billion, right, of liquidity, but not everybody could do that, right? It's a special situation. So they have a tail risk that certain companies, you wouldn't see. You usually don't see something that could go out of business so quickly in a matter of days. And with SVB, it was basically a run on the bank. So here we go. Those are the top ones. FRC, I think, Zion. These are bank ones.
Actually, one of the questions outstanding from yesterday is showing up in the most active this morning. Schwab, SCHW.
Okay.
They were asking you to look at I think either the option order flow or who's making up the order flow, do the same analysis I think you were doing at SPY yesterday was what they were asking.
I think I was looking at the stock flow, the stock order flow.
Yeah, that's what they wanted to see in Schwab.
Okay. All right. So we'll take a look at Schwab. And before I move to Schwab, just really quick note, when we look at the pre-market trading, I'm going to take a look at Schwab because I think we're looking at the pre-market trading. And the certain insights we want to get in a pre-market, it has to do with trying to separate the sessions and the different trading sessions that we have during the day. So right now we have trading that's going on in pre-market hours. Then we're going to have an opening rotation, which is basically a single price auction right before the start of the day. That's how we will kick off the regular trading hours. Then you have regular trading hours. You have a closing auction, right? And then you have after hours. Then you have other things in between that are important, but let's just keep it at that. And there are different trader cohorts that are behaving in these different trading sessions. So in the pre-market, what we're doing is looking at a particular trader cohort, which is, there are active traders and there are passive traders. And active traders are people who are actively watching stocks. They're either have models that could be based on technical analysis, fundamental analysis, on news. They could be re-hedging potentially their options positions, but they're very active. It's not the same thing as when during trading hours, we're going to have a lot of other different participants in there, because we're going to have passive VWAPs kicking in. We have pension funds, IRA order flow. We're going to have, all types of other order flow that will not be participating in the pre-market hours because, there are restrictions, regulations to it, or it just doesn't fit that model, right? So in the beginning, we're really kind of seeing, there could be fundamental traders that are reacting to news or fundamentals, and they're repricing the stock based on their models. Technical, you got very active traders using technicals because it's hitting certain thresholds, and now the options traders are active traders, but the options are not trading in the pre-market hours. But you may have people with positions that could be rehedging as well. But for the most part, it's very active traders, and not the passive flow that you see throughout the day. So we get an insight, where are they pricing things? How are they seeing it? They might be anticipating order flow coming in after the market's open. And what I'll do is just kind of give you a quick screen, and then I'm going to move on to Charles Schwab. But here we could screen out some of what's going on in pre-market hours by using the screener and these filters. And let's just I'm going to stick with the S&P 500. So let's do an ETF. I'm going to filter out all this stuff in ETF for SPY. So S&P 500 stocks that are trading at least 500 shares or more, above $5. I think they're all of them. So we could see here that in a pre-market hours, we got 181 stocks that fit this. And, one thing we could take a look at is what maybe technical traders might be looking at. And one things they could be looking at certain breakouts, and here we could take a look at maybe using yesterday's high and low range of the day. That's where the stock traded yesterday. Is the stock in a pre-market hours trading above it, that or below? Because that could be one indicator that, hey, it's breaking out of the previous day's trading channel. So here we could take a look at stocks trading above yesterday's high. So here we got a list of Meta, Adobe, Qualcomm. So we got 11 of those. Let's just go to the other ones below yesterday. So we got one here, one of those. So from this perspective, from a technical, that seems positive, right? If you were doing it that simple technical analysis, and of course you could do above if the stock crossed today above the 250. So let's say the stock crossed above the 250 in the pre-market. So nothing happened like that today, below the 250. So one crossed below the 250. So it's kind of just giving us some insights, maybe what different trader cohorts are doing in the pre-market hours, what they might be looking at. I'm going to move on though to Charles Schwab because I'm like halfway through the show. So what's the symbol, Will, for Charles Schwab? You're on mute.
Sorry, I was coughing. SCHW is the symbol?
SCHW?
No, you put CSHW.
Oh,
SCHW.
SCHW. Oh, my computer's slow. SCHW. Okay. Let me see here. Here it is, Charles Schwab. All right. So I'm gonna go to yesterday's price action. Let's just take a look at yesterday. It's VWAP. So this is what happened yesterday on the price for Charles Schwab. And then we have a breakdown here of the volume. And we're going to get a little bit different insight here than the pre-market, because this is during trading hours yesterday. So this is what happened yesterday from the opening to the close. And we have three volume charts here, giving us a little bit different insights. This one here is breaking down the volume into brackets by the amount of volume that traded at different price points. Okay. And we could see here some places here where the volume there wasn't a lot of volume. Then we got big bars here, then it thinned out and big bars here. And what this could tell us is some insights about the liquidity of the book and the liquidity markets. So when you think about liquidity, you know, a lot of people, for a retail investor, you know, you have a bid-ask spread of, you know, 2 cents, and if you're buying 100 shares, it doesn't matter. For you, that's the liquidity. But that's not the liquidity for the market. That's not the liquidity for big institutions. That's not for big traders, because they're moving more stock than 100 shares. They're moving more stock than 1,000. So where are those liquidity pockets? You know, how far apart are they? How much can you get? Right. So those are those big bars where that's the liquidity of the real market, the book. So, you know, you could see here, sometimes it could be a dollar apart where those big bars are. It could be $2 apart, or they could be, you know, they could be 10 cents apart. So this gives us kind of a clue, you know, how much between each level do you have to move when there's a lot of stock and volume that needs to be traded, you know, how far apart those levels are. Okay, so that's kind of more looking at the liquidity of the market, where large stock has to, you know, transact in and out. So the wider these are, so if you get these big illiquid you know, bubbles, the more volatile it is, the harder it is to move the stock around. And here, what's shown just by looking at the bar, here it looks like it dipped in the morning, so probably around here, but it doesn't look like there's a lot of volume, because, you know, looks to me like the buyers showed up, but they had to rally it all the way up to here to start getting more stock. And then the next, you know, you had a little bit of pockets of illiquidity here, and then it had to rally up there. So that's what it gives you. If these were perfectly even, if all these bars were perfectly even, it means like there's a lot of stock at every level, right? But that's not right here what we see. Down here, you know, there weren't that many sellers. You know, it did dip here, but it took, you know, from this spot to this spot to get to the real liquidity. So that's it, you know, one of the insights we're getting from this chart. Let me skip to the next chart here. Here we try to break it down, and then I'm going to tell you, you know, after we look at these charts, I'm going to tell you what, by looking at them, what my insights is from it. But here, this chart here breaks down at every level, you know, that same volume, what portion of the volume appeared to be either small retail orders, or what portion were just look like regular retail orders, what portion looked like more, you know, professional order types, you know, larger ones that are interacting perhaps every day, you know, to options trades or whatever. And then what portion of it were really large volume trades that look like institutions. All right, so this is what this is showing us here. By that would be the total volume, and that's the breakdown of that volume. I'm going to come back to this one. You know, let's just talk about this one first, and then we'll come back to both of these. Now, this one to the right, it's giving us the breakdown by the volume that traded on the public exchanges, the lit exchanges, and the volume that traded in a dark pool, which are the private, you know, private operators. And it's important to understand the differences. What are the dark pools? Those are privately run matching exchanges. Okay, that means that you're not going to see lit bids and offers, but it's played like Goldman, Merrill. What they do is try to match up orders on their own private, you know, exchange, and if they match it up in the trades, then that trade will get reported to the TRF system, gets picked up on the trade tape. All right, and the private operators, for the most part, we think of them as a lot of it is passive, right? So there's a lot of passive liquidity in there. In other words, you could have a VWAP order in there, you could have maybe even a liquidity provider in there, but they don't need an immediate execution. They just don't want to expose their intent. So, because if they need an immediate execution, they would either trade there or go right to the market, to the lit exchange. So they're okay sitting in the dark pool, trying to accumulate the stock that they need, or trade against uninformed order flow. So what you'll see is a lot of VWAP orders in there, passive orders. They're trying to trade against other passive orders, or they're trying to trade against like retail order flow that is considered uninformed. Okay. And to get into those dark pools, it's not the same thing as the public exchanges. Anybody could trade them. To get into those dark pools, you would need to, get permission, or your broker needs permission to access that dark pool liquidity. And they have different rules in place, and usually they do not allow what they call like predatory trading or high frequency trading, or traders that are more informed and could take advantage of liquidity at the right time. Right. So they try to keep those people out. If they detect you're in there, they're gonna probably kick you out anyway, because they don't want to lose customers, right? They don't want their customers to be getting run over by a high frequency trading firm. So the lit exchanges, they'll have everybody's. Anybody could access that public exchange. And when we look at, right now what we're looking at is kind of, let's take these two. And we know that there are different types of traders in the markets during trading hours. There's going to be VWAP orders, mutual funds. There's going to be people trading options, active traders. There might be high frequency traders, fundamental traders. There are going to be all types of traders. You're going to have people trading strategies like peg, this peg to that, all day trading strategies. Everything kind of then gets all mixed in there. And one thing that I look for, at least, is how well the volume is distributed at each level. So to detect the VWAP orders, right? What are VWAP orders? VWAP orders, they're given to an exchange, to like say Goldman or to whoever, Knight Capital. And what they do is say, okay, I have this VWAP order. I need to buy X amount of shares today. And my goal is to get the day's VWAP. Okay. So if you take the entire days of trading, their goal is to say, okay, I'm gonna, whatever the VWAP is for the day, volume weighted average price for the day, that's my objective. But in order to do that, right, when you have a VWAP, to do it's not the same thing as just buying the same amount every hour, because you won't get the VWAP. You have to buy proportionally to the volume at each level, right? Because if you just bought equal volumes at each level, you're not going to get the VWAP, because a lot of it traded over here, right? The volume average price here. So when we look at it and we say that this looks to me right now, to me, this looks like the distribution of trader type and the distribution between the lit exchange and dark pool at every level looks proportional, right? It doesn't look out of whack. Like I don't have this one big line, where it's mostly retail, one big line where it's like big institution. It looks proportional to me, meaning that it's indicating that the VWAPs yesterday were, were active, and they might have been the dominant force.
Hey, Dave,
Yeah.
we had a question pop up from CK on Zoom. He's asking, what does small indicate?
So a very small retail trader, and this started coming up because, like Robinhood and stuff started to attract very small retail traders. So we consider a small retail trade as a trade that was executed under notional $2,000. Okay, so anything that's, could be, in some stocks it's one share, right? Some stocks it could be 50 shares. And if we detect that there's a small trade that's not part of, a sequence of trades, right? So we measure how far apart these different trades are. We measure, if it's a sequence of trades, and if we detect like, hey, there's a small trade here, there's enough time between these trades that it looked like somebody just entered in to buy, 2 shares of Charles Schwab, or it has to be under $2,000. So, I think like, let me see if it was, might be 2,000 for the options. Might be under 5,000 actually for the stock. I have to look. Now I confuse myself. But the idea is that, is it a lot of, trades coming from very small, like Robinhood type traders. So that would be a small trader. Then you have retail that could be high net worth individuals, right? So they're, for example, Merrill Lynch has a lot of retail customers who are high net worth individuals, and they could probably buy 1,000, Charles Schwab. It's not a big deal, so they'll range, the retail will range higher. Professionals, they're probably already, doing more than that. I have to look at the cutoff line. I think it was 100,000 to 250,000 in a trade, and then we got above 250 in the institutional. I have to look exactly the numbers, but if it's on the top of my head, I think that the small one, it was under 5,000. The retail, I think it was up to 100,000. Then the professional up to 250, and then over 250, we give it to the institutions. That's a single trade. All right. Well, you're on mute. I don't know if you're asking me something.
No, that was perfect. Thank you.
Yep. So, and that's our cutoff line. People, and that's how we put it. But I'm sure some people are going to disagree, and some people might think 5,150 is, but that's how we cut it off, because we wanted to put it into four buckets. So over here, just getting back to it, looking at how that volume is distributed, to me, it indicates, right, that there's probably VWAP orders in there, because that's how the VWAP orders, they try to participate proportionally at each volume level. In the dark pool, they'll try to participate proportionally, and even as a cohort. So if I was just going to make a inference from this volume, I would say that, yeah, there are probably VWAP orders in there, that were pretty active. If given the price action that it's floating up, right? Because, a VWAP order will not spike it up, right? It will look more like gradual, right? So the way that it's floating up and the way that this volume is being distributed, I would say that the VWAP orders were the dominant, not the only volume, but they were a dominant participant in yesterday's transactions, right? Because of the way this price looks, how it's floating, and the way how the volume is being distributed. Well, those are my insights. We're right up at 9:30. I guess there's no questions. I'll leave it at that.
Yeah, that was awesome, D. Thanks for answering the question. Great job. Have a great trading day, everyone. Thanks, D.
All right. Thanks, everyone, for joining. Stay safe out there. Have a great trading day and hope to see you guys tomorrow.
Yeah, remember, thumbs up and subscribe to the YouTube